Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, May 4, 2015. Inside the numbers tonight, we're going to discuss the SPY and the E-mini contract, see where we're going in the major market, crude oil, gold, interest rates in the bond market, and the U.S. dollar. So let's go get right into the SPY chart. Here's a daily chart. And basically, what you're looking at is market had an update today, and it was extremely light volume, okay? So whatever the reason is for the light volume doesn't really matter. The point is, whenever there is light volume, the tendency is for the market to float higher, okay? We really traded in, the majority of the day was in a narrow range. And here's where we're going from here, okay? Basically, based on today's high, and I'll go over to the E-mini contract. Today's high was at 21.15. So I've moved the upside pivot point to 21.15. So above 21.15 is now, and by the way, our close today was relatively bullish, which means that I do expect higher prices, but now we have to close above 21.15 to get that slingshot higher and a significant move higher. May is going to be a volatile month. You're going to get a big move, and I think it's coming this week, one way or the other. My tendency is to think right now it's on the upside because most people would think it's down. And the reason why I say that is because I just took a glance after the market closed today at the Yahoo Finance homepage. And if you scroll down the middle of the page and look at all the articles throughout the day today, okay, that were featured articles, and you get any article that had to do with whether it was a bullish or bearish sentiment on the market, okay, and count them up. I counted about 9 bearish sentiment articles to 1 neutral out of 10. Okay, out of 10 articles that just talked about the market, that's talked about whether it was bullish or bearish of the market. Some nonsensical reason why, it doesn't matter. You know, it wasn't about, the bond market. It wasn't about fracking. It was about the stock market. And it was 10 articles and 9 were bearish. And that leads me to believe that the tendency is going to be to the upside. And it's not scientific. It's just common sense, experience. Tends to happen more often than not. You know, the contrary play tends to win out more than not. However, on the downside, if we should break lower, we could go right into the 2060, 2070 area in very, very short order because this market is somewhat of a tinderbox right now. Because we've been trading in such a narrow range, back and forth, back and forth, back and forth. The slightest spark is going to send the market in one direction or another. So on the downside, what could spark the market? Well, it could be Greece this week, and you know how much I love Greece. Not that Greece is ever the reason why, but Greece could become the excuse for a down market. Apparently, they're supposed to make some kind of a debt payment this week. And either this week or next, I'm not exactly sure. But what I do know is that I think it's this week. They're supposed to come to the window with a debt payment, and if they don't make the payment, they default, and basically it leaves us in the same position we are in today. So I don't know why it would be important, but if the market's down and Greece is in the news, Greece becomes the reason the market's down. You got to think about that for a second. It does make sense. You have to think about it. If the market's down, okay, and Greece is in the news, Greece becomes the reason the market's down, okay? It's really a self-fulfilling prophecy. However, that's where we are in the E-mini and or the SPY. We're basically in a holding pattern. You know, while we even had an update today and it was a bullish close, I'm looking for a larger move this week, okay? I'm looking for a culmination in a lot of markets to happen this week, and I'm looking for it to get a little wild. Okay, I'm looking for it to get a little wild in the month of May, and that's really where we are. Let's go over, I wish I had more for you in terms of definitive predictions or indications of where the market might go, but I just don't. I mean, we're in such a flux right now that I know a big move is coming, and I just can't tell you it's up or down, because that would be foolish of me to say I know which way it's going to be. I just don't. Okay, I have my indications, I have my reasonings, I have my feelings, but I don't have anything scientific to offer you. So we're going to have to be in a holding pattern, and we're just going to have to say that, make the line in the sand. 21.15 on the upside is a slingshot higher, and you know, we'll basically use 21.03 below, okay, a close below 21.03 on the downside as the bearish pivot point, and that's where we're going to go for now. Okay, we'll update it again tomorrow night. Let's go over to gold. All right, gold had an up day, and remember, this one gets interesting. Let's go over to the intraday chart. All right, remember what happened. Let's see, when is this? This is the 4th, which is today. Looking for the end of the day on the 3rd. Okay, oh, this is, let's look at the GLD chart. It's easier to find over there. So watch this, okay? So we're going to the 3rd, all right? And, not the 3rd, the 1st. And at the end of the day, if you remember, right at the end of the day, last candle of the day, we spiked up in gold and GLD. And I came to you Friday night and I said, look it, I said, this is suspicious. I've seen this before. I've read this book before. You're going to look for higher prices on Monday in gold. Okay, they tipped the market. That was a tell. All right, so that was obvious, and that's what happened today. I don't think that's the end of the move. I think what happened was, now let's go to the hourly chart. Okay, we can stay with GLD. It's fine. All right, I think what happened was we made the up move, okay, and now we're just building some pressure for another move higher, okay? I don't think this was a one-day wonder. I think the market was oversold last week. I think we made a significant, at least on a daily basis in terms of cycle work, a daily bottom, okay, last week on Friday. And I think there's higher prices ahead. Where do those higher prices go? Well, I'm going to have to switch over back to the gold futures contract for a second. And what I see happening here, and I have some notes. Let me just make sure I get my numbers right. Okay. Yeah. Okay, so basically, we're going to take a run back up to 1,200, but it's probably, you know, the definitive number is like 1198, but figure it's around 1,200. The next level, again, is back to 1212, and then the next level from that is, again, 1231, okay? So those are our levels. They haven't changed, but it's a stair step. We're not going to go from here to 1231 tomorrow. I'm not looking for downside. I am looking for more upside, okay? But if you're long, right now, the prudent thing to do would be to use the low of 1179.80. So a break of 1179.80 hourly close or daily close below 1179.80, or if you want to get a little bit, leave it a little bit more leeway, 1176.90, and that's where your stop would be. So if we did start to sell off and it turned out that we were wrong, I was wrong in terms of the price action in gold, that would be your stop out level. But for now, I am expecting higher prices into this week, meaning it's not just necessarily tomorrow. I think we're going to have a week or so of higher prices in gold. So that should put in perspective. So don't get scared away if gold's down $4 tomorrow. I'm still looking for higher prices into this week and then some, okay? We'll have to see what the price action is, but that's what I'm looking for. Let's go over to oil. Now, oil's churning around, and it's it's not really doing anything. So we're above the, let's go to the daily chart. I love that chart, though. We've been, like, developing this chart over the last several weeks, and it just keeps getting more and more stuff on it, which gives us more and more guidelines of what we're doing. So here we have this this center of attention here. Okay, this is where we are. This is a bullish pattern. But the last couple of days we're churning around. So the market's kind of stalled out, and it's kind of trying to decide which way it's going to go. And as long as we stay above $58 a barrel, it's going to go higher. Okay, and we have two upside targets on oil: $60 to $60.50, and then $64 if we continue higher. Okay, but there has to be a catalyst to get up to that level. And the catalyst may have to be a geopolitical event. It may have to be a Middle East event. It may have to be a supply event, which I don't foresee happening. Something has to spark an up move in oil, and it's generally something that happens. You wake up in the morning and oil's up a couple of bucks because of something that happened. So we'll see, but as long as we stay above $58 a barrel, there's higher prices. So that's still your pivot point, and it's a very good roadmap, or I should say line in the sand, because you know where you're wrong. 58 below, you're wrong. Not wrong, you're just bearish. 58 above, you're bullish. And we're looking for 60.5 up to maybe even as high as 64, but we'll have to see how it works out as we begin to and as we get there. But that's it. I don't have anything else. I mean, oil was basically just churning and burning today. It didn't really do anything. So there's not much to report. Let's go to, let's go to the bond market. The bond market got killed today, and here's where we are. Okay, this is an important one, because if you're long the bond market, you need to pay attention. I'm long the bond market right now, so I need to pay attention. Here we came into double bottom. Now, it looked like we were going to bounce up at this other support level last week, and we did, and then we broke down on Friday, and we broke further today. So we came through the 200 period moving average into the secondary level of support at was 122, 123, okay? So what I suggest is any close below today's low tomorrow, any close below today's low tomorrow, you're out, okay? Whether or not it reverses from there, I don't care, but that's the way I play it. I don't give it the 10% rule. When I come into a significant, this is really more than a double bottom. Look at all this support. You have a bottom here. You have a pivot here, okay? A pivot here. It's 200 period moving average here. This market should bounce. If this market doesn't bounce, then it's very, very weak and there's something else going on. And then we have to refer over to this kind of chart where, remember I said that we've made a longer term generational high in bonds. Not to say we can't get bounces along the way, and not to say we can't get rallies for months at a time, okay? And that's why I was long. It's not important that I know that this is going to be lower later, okay? That doesn't mean in the month of May we can't have an up move in bonds, right? So this is not something you trade. This is something you watch. So, so when you go into the more narrow picture on the daily basis, here's the deal. If we don't bounce and we close tomorrow below today's low, which on TLT is 122.72, and he closed below 122.72, you're gone. Okay, it's just the way I play it. I'm gone. Let's put it that way. You're on your own, but I'm gone. I'm trying to help here, and I think that I'm going to say I'm wrong at that point, and that's the way I play it. Sometimes your first loss is your best loss, and sometimes I'm even wrong taking a loss, but I play it systematically, okay? I don't hope, I don't have a gut feeling, okay, when the market does certain things that tells me something else is going on. It's a very systematic process, and everybody should go that way. This is a business. Your inventory is your capital. I can't say it enough. If you don't have your inventory, you can't be in business, okay? Let's go over to the dollar. I think there's a big move coming in the dollar. I think we hit a significant low last week in the zone, okay? I have a bottom. I believe it's a pivot bottom. I believe it's a longer term bottom. I think we're going back up higher, really higher. And so that's the way I'm playing it for now. So anybody long, okay, the dollar can now use the low, okay, of 94.47 on the actual dollar contract. This happens to be the continuous contract, but if you're playing anything like the UUP, you just use the low from April 30th as your stop out point. Any close below that on a daily basis, I would stop out. And so there's where you're trading against for higher prices, okay? All along, we were looking to come back into the zone. It came back into the zone. I said buy with three hands. I bought with three hands, long the dollar, okay? What else do we have? we're in a natural gas trade. Might as well talk about that for a second. It's against us by a few pennies, but what I have is I had a line on this chart that went away, so let me put it back in. Basically, what I'm looking... Oh, this is not this is not natural gas. That's copper. Sorry, folks, wrong chart. So here's the natural gas chart, 285. 285 is going to be my line in the sand, the daily close above 285, and I'm going to call that one wrong, but I don't think we're going to get there. Tomorrow should be a significant day in terms of a turning point. So tomorrow, plus or minus one day, didn't really get a significant turn today. So it's tomorrow or Wednesday, we should see a significant turn in the price of natural gas. So I'm going to be a little patient on that one. Just thought I'd make mention for those of you that took that trade. Copper is something different. Copper, if I can bring up a longer term chart, and I thought I put some, yeah, here it is. I have a big cycle coming in the month of June in copper. Now, this to me looks like it could be a longer term monthly chart, head and shoulders pattern. And you've seen that over the last week or so, what we've done with head and shoulders pattern. Saw it with Yelp. We saw an inverse head and shoulder pattern on the dollar. Here's another one. This is the head, this is your left shoulder, and this is your right shoulder. You've broke down and you rallied back up, you broke down. Now, because I have a cycle, and this is a longer term cycle coming in June, it's not out of the realm of possibility for a market to rally up into a cycle. So I would be looking for higher prices in copper, just as a general rule, going into the next, let's say, 4 to 6 weeks or so. Okay, if we should get a significant rally over the next month or so into June in copper, and I've put a number of $3 on the chart. So if I can short copper above $3, I'm going to begin to look at that trade. I have to see how the chart reacts. I have to see what the pattern looks like when it gets there. I'm not suggesting do it. I'm suggesting I'm watching it. And I'm just going to probably talk about it from time to time because this is significant enough to where we could have another long-term, very, very profitable trade similar to what we anticipate in the dollar. And this is another one of those scenarios where this could be a multi-month trade that we can just hold on for a while and just reap the benefit of knowing that a larger term cycle was turning. And if we get a signal and we get the right chart setup and the right pattern, we're going to do it. So I'm going to watch it and I'm going to talk about it from time to time. So I wanted to just alert everybody and make you aware of that. So I think that's about it for tonight. Hopefully it's helpful. I think I covered everything that I should have. And I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.